Welcome back, everybody, to another trade recap. Today, we're going to be reviewing the week of the 18th, May 18th, 2026. So let's just get right into it. So, as you can see, we're forming a very, very obvious market maker buy model, but we didn't start out that way. So, going into the week, if we mark out all of our days here, I'll show you guys kind of how I marked out my days, how I see the market forming as it's kind of delivering everything it needs to deliver. So, starting on Monday, so from 18 to 18, we expected, or I expected, an accumulation day, which means what? We're not really going to do much. We're not going to take out any major external draws like this high here or this low here. I'd already noted that Monday, when we have an accumulation day, we should maintain within the range of whatever we form. So as you can see, we made a move lower in the PM set or in the Asia session, and then we made a big run up right before market opens, and then we just kind of play around between those two rounds. Those two ranges for the rest of the day, we'll take out previous highs, we'll take out the previous lows, low again, but we never really do anything, which is kind of the goal of Monday. So perfect, no trade Monday, wonderful. Now going into Tuesday. Tuesday is the manipulation day. What does that mean? We expect us to make a move lower, and since we're or in the opposite direction, but since we're bullish, that obviously means a move lower. So let's highlight here Tuesday in red again, 1818. And actually, I did try to short on Tuesday. So we had a lot of chop previous into the market. We had SMTs at these highs, if I remember correctly. SMT at this high. I'm not going to double check it just because it takes too much time, but just assume that there's SMTs at these highs, right? Which is the reason I took the short. And we had this really nice sell-off until we hit our target here. And basically, I was going short with the assumption that we were going to continue even lower. But obviously, that assumption was a little bit off. So we went short here. I think it's a bit lower here. We wanted to move lower. We eventually took out this low right here. I went break even. And obviously, we got stopped out. No big deal. Whatever. At the end, I was obviously my bias was completely wrong for the PM session. We just did a really nice reversal, but that was the trade on Tuesday. There was really nothing much happening, but beautiful move lower, and we took out this sell side here, which is kind of what I was looking at for the low of the week. We put in our low of the week here at 10 a.m. Beautiful. Now, if we're looking at this as basically two sides of a whole, let's show you guys kind of what I was looking at and how I was already on Tuesday visualizing this kind of happening. So as you can see, if I can get out my little tool here, I don't know where it is. Curve, perfect. We have the sell side of the curve, and we have the buy side of the curve. Very, very obvious, right? I think anybody, this is like picture perfect sell side and buy side of the curve, which means what? We are purposely putting in highs that are very what we call low resistance liquidity, right? Which means what? A lot of highs, barely take it. Another high, another high, another high, another high, another high, another high, all the way until we form what is called the reversal, right? Obviously, the smart money reversal, which is the low on Tuesday, which if you combine with quarterly theory, helps identify what time and what day specifically we want to see that. Very, very obvious profile here. Now, what does that mean? If this is the low, we just took a high time frame sell side liquidity here, very, very obvious. And I think we drew into some form of fair value gap or order block here. Perfect, right? 4-hour order block. Tap it into here. You can draw it out however you like. I'll usually use just the first candle. You can use this candle as well. It's all the same to me. I don't really care about details like that unless it's an entry. So overall market structure, you guys can see is very, very. Now we expect a reversal. So what does that mean? Again, into Wednesday, it aligns perfectly for our Wednesday. If we go here, again, 1818, we can see now a distribution leg. Now we're expecting higher prices. Now, I did not take a trade on Wednesday because we were above midnight open. And honestly, I just personally don't like taking trades above midnight open that are long. But it was still a pretty ideal day, right? We generate our liquidity. I'm not sure if we formed some form of SMT at the lows. Ideally, we did. That would have been your entry point. But honestly, I wasn't looking into trades once I saw how high above we were. But overall, another really solid day. And then we had Thursday, which is a continuation day. Or, like I said, if you're just looking at the buy model, it should just be bullish anyways. We'll color this one green. Or let's color this one blue. Blue here. Unfortunately, Thursday was extremely choppy. We had all this chop in the AM session. No trades for me. There was no 15-minute fair value gaps. There was no sweep of the lows. There was pretty much nothing happening. And then we come into today, which is Friday. I'll title this one. Or I'll color this one. Let's come up with a new color for Friday. Let's do do yellow. Going into Friday, the draw ultimately is still this high right here. So going into Friday, we shouldn't really have much moves lower. You should only sweep out 1, maybe 2 points of liquidity, and then it should be very, very bullish. So if you look at all the times that we ran up, first of all, we either failed to take it and more than likely form some sort of manipulation, or we'll just sweep one thing. We'll sweep out like these lows here. We'll sweep out like this low here, tap into a 1 hour, etc., etc. And if you go on the 15-minute as well, it becomes a little bit more clear, right? We have the moves lower, move lower, sweep, sweep, sweep. Ideally, like I said, we take out the larger points of interest, but obviously it didn't happen this time around. So going into today, I expected us to make a sweep and then just a really big move up, not a lot of retracement. And as you can see, we kind of already did that pre-market around 6:30, where we came and we took this low here, which is this really big candle here at right off Asia Open, and it was SMT as well. We ES failed to take these lows in the pre-market session, so that should already be our main manipulation move. And as you can see, this is kind of a model within a model, if you guys know how those things work, which means what? We form, again, even within this tiny little movement here. Let me favor this curve. We have one side of the curve and the other side of the curve. Oh, that is the completely wrong way. Okay, sorry guys. You guys have to deal with a terrible artist. But this is kind of how market maker buy models work. They work in each other, like models within models, right? Entries within entries. So we have all our move lower. We have the reversal, which is again a sweep of liquidity. We start getting that displacement. Theoretically, you could have entered here, but I mean, who's doing that? Not me. Maybe one of you guys can do that, but not me. I'm not that good yet. So we have our manipulation leg here, which means this should be the low of the day, which it ended up being. Perfect. So now going into New York Open, you still want to see a manipulation move, but you're not exactly worried about like making the low of the day, right? It's very obviously bullish, so all you have to do when it's days like this is wait to pull into some sort of fair value gap, and then that's where you go long. And for me, I personally choose 15-minute fair value gaps. So I'll kind of delete this, or not delete this, I'll probably add this here, this green, let's make this green, perfect. This fair value gap, this 15-minute fair value gap. Now, I know what you're saying. Wait a minute, we didn't even tap into the halfway point, which is typically what I want to see is a halfway point entry. But if we look at what ES did, let's do the main contract so I can show you. It actually failed to even tap into the fair value gap, and it failed to take out the same low as NQ did right here. We'll call this SMT. Oops. That's a little bit spoilers there. That's the whole trade. But yes, SMT here. Beautiful. So now we have our low of the day put in. We have our first target hit, right? So obviously that's when we would look for. If you were short bias today, you would have waited till after this was hit. You would not have taken any shorts until beforehand. None of this would have been valid until this was taken. But if we're long biased, which we should be because the overall structure is very, very long biased, then all you need is a 15-minute fair value gap, our manipulation leg, done, done, and done. And then the right time of the day, right? Because we also trade quarterly theory. So we would look and we would say, and we'd look, and we'll divide these into quarters. So we'll go from 9 to 10:30, which is the 90-minute cycle. 9 to 10:30. And then you can split this up into the micros, which is what I do, the microcycles. So we'll split this into 4. I'll kind of explain how I do this. Oops. 4. One more. Oh my gosh. Sorry. Okay. So now we can kind of, I'll get rid of this yellow here so it makes it a little bit easier to see. So now we can clearly see kind of what we're seeing here, right? So we're seeing an accumulation period, a huge manipulation period, and then we kind of have the quote-unquote distribution. Now, this distribution is for a bearish move, but we can still have, and this is a new concept I'm kind of like, not teaching, but like thinking about and like seeing a lot more, is that like, yes, this is the distribution, which normally means that the rest of the day should be bearish, right? Well, we have the manipulation led, the distribution is bearish, we should be bearish for the rest of the day. But that's not always the case, right? There are different profiles like XAMD profile where we'll have the quote-unquote distribution, which is the AM session, actually be the manipulation, and then the PM is the distribution. And that's obviously what happened here. We had a manipulation leg here, and we made the low of the day. But I always know if I'm trying to take a really like big reversal, I'll only do it in the last quarter which, if you guys know the last quarter, is the reversal or continuation quarter. And in this case, I wanted to see a reversal. I was very, very bullish. I do not want to see lower prices. I want to see higher prices. So I'll wait until this quarter here, and then I'll wait to see, okay, 15-minute, SMT, what is left? So this is the right time of day. We have the 15-minute. We have the manipulation. We have the SSMT, because this is also from a previous 90-minute cycle. Okay, what's left? Displacement through making an IFEG or making a regular FEG. We have both. BPR, beautiful. You can go long here. I would have chosen just the IFEG is fine. You can set your stop right here to below the low. And you can target the high of the session range here, 740. Ideally, you would target this. And this is actually kind of where I expected price to kind of start moving. But obviously, it didn't quite make it. But for sure, you would have at least taken partials here and then, close out the rest whenever the day ended. Very, very long trade here. It might have taken you about 3 hours to hit TP, but it happened. And then more than likely, as you can see here, if we just draw that out, you would have got stopped break even on the rest, or if you trailed your stop loss, which you should have been doing, once you hit TP, you would have got stop out in profit. It still would have been a very, very good day for you, regardless if you had taken this long. So that's kind of how I break down market maker buy models and implement it with quarterly theory, and then kind of showcasing like now how I looked at today. And if you guys were here, I did live stream it, and I did tell you guys that this is going to likely be the move of the day. This is what we're going to be expecting to see. And so this is how I identify market maker buy models with all 4 quarters of the week plus Friday. Now, typically, like I said, because of like some of you guys might have went short because you want to see a retracement into the weekly range, which obviously we're not going to go much lower than where we've already done, because this is still a buy model. We're still expecting higher prices, especially until we hit all-time highs, which is the current drawn liquidity. So anyways, that's pretty much the whole week. That's everything that I saw this week. That's the most important things I wanted to talk about. 1 break-even trade, 1 theoretical win, but that's it. Not much else going on. Like I said, you can know the market, you can know the structure, but if there's no entry, there's just no entry. And for me, there was not really anything that I wanted to see entry-wise, so I kind of just stayed away. So anyways, hope you guys enjoyed. I'll see you guys in the next video, where we'll kind of break down market maker buy models in a little bit of a better detail here if you guys would like. So make sure you like, comment, share, subscribe, all that good stuff, and I'll see you guys in the next one. Peace.